Hello everyone, and thanks for tuning in to xauusd's Market Outlook. In this video, we're giving an idea for a possible trade over the next few days and the rationale behind it, what traders need to be aware of if they were to take on the idea. But before the idea for this week, let's look back at the performance of the previous week's idea. Last week, the idea was a possible sell for the S&P 500 from the area of around 4,000, moving down to approximately 3,800. That was partially valid, with last Thursday's movement having taken US 500 down to around 3,900, but the full target was not achieved from last week's idea. I'm Michael Stark, Financial Content Manager, and joining me to give this week's idea for a trade is Andreas Themistocleus, Trading Specialist. Thanks very much, Andreas, for being here.
Thank you very much for having me, Michael.
So what's the idea for a trade for this week, Andreas?
So for this week, I'm thinking about a long position, possibly on the gold chart, after some minor correction around the psychological support of the round number of around 1,900 price area, and then possibly a continuation of the previous rally up.
And what do you think, Andreas, is some of the key narratives or the key factors that are driving that possible movement up by gold?
So we have the Chinese reopening of the economy after the holidays of the Lunar New Year, which is expected to increase the demand for the yellow metal and possibly boosting the prices to the upside. On the economic calendar, we have the quarterly US GDP publication coming up on Thursday the 26th, where the market is expecting a slight drop on the figure, and which most probably is going to create some minor losses on the dollar against its pairs, especially gold. We also have the manufacturing PMI, which is expected not that much of a change, but the key point there is that it's below 50, indicating that the manufacturing sector is still contracting in the States and possibly creating, again, some minor losses on the dollar. And also we have the Fed meeting on the 1st of February, where the possibility of a single hike is the most probable scenario. The Fed watch is above the 97%. So a single hike is the most possible publication coming from the Fed, again creating losses for the dollar and boosting the gold prices up.
So in summary, the idea for this week is a possible buy with a continuation of gold after a small correction, and the primary narrative driving that is the reopening of China and the higher demand for gold in China. What traders need to be aware of over the next few days if they take the trade is primarily US GDP, which is happening this week, and then next Wednesday there is American ISM manufacturing PMI and pretty much certain single hike from the Fed. So thanks very much, Andreas, for joining us to give us the idea and the narrative and what traders should be aware of for this week.
Thank you very much, Michael. I wish you all a successful trading week. Always remember to manage your risk and use money management rules.
And remember, this is just an idea, it's not a guaranteed success.